Good afternoon. This is Brian Shannon from AlphaTrends.net. It is Tuesday, the 8th of April, 2008. The market's closed, and the S&P 500 pulled back 39 cents, or about 0.28%. The weakness today shouldn't come as a surprise. The market's been kind of warning us a little bit that it's been having a little bit further trouble moving higher the last couple days. In particular, when we saw the late day weakness yesterday and on Friday. That's Friday and on Monday. So the market gapped lower and really wasn't able to do much for the rest of the day. When we look at the 1 minute chart here with the daily VWAP, you can see that the S&P 500 did close above it, and late in the day, the market started to recover a little bit with these higher highs and higher lows. But looking really at the 30-minute time frame, this is our more relevant picture in here, because this shows the uptrend that it's been in since those mid-March lows from when the Bear Stearns news came out back here. The subsequent rally we saw after some Federal Reserve moves, and that pullback that we saw to here, the move that began last Tuesday, and now we've got this prior level of resistance near about 135. That looks like it ought to be. I'm sorry, that's 135.70 or so. That looks like it probably ought to act as support on a pullback. Right now, we do have a little bit of reason for concern, and when the market begins to pull back, you never know if it's going to just keep pulling back or if it's going to find support at this prior level of resistance. This level of prior resistance does become a potential level of support. What you want to do is then look for the evidence that the market is finding support in that area. And right now, it looks like it is for now, but we do have the market below the 5-day moving average, so it tells us just to be careful in here a little bit. Again, we've got all kinds of earnings coming out, and today we had the semiconductors pretty much blow up, and that's something you've got to take seriously because the semiconductors are important to this market. But this little pattern of higher highs and higher lows is clearly broken on the 30-minute time frame for the S&P 500. So again, we never know if it's going to keep pulling back or if it's going to find support, but there's a lot of reasons to think that it ought to hold up. We have this prior level in here near 135 that's been very important as support back here, and then resistance again over there. That's also where we see the again, it's rising, the 50-day moving average. So I would tend to think there's going to be buyers in there if it pulls back that deep. And it's also, again, the level that the average price that this market has traded at since the beginning of the year. When we use this VWAP tool, the volume weighted average price is right there at about 135. So it seems as though even if we get a little bit further sell off, it would be healthy for this market, and then we would expect that level to be the bigger area where there's the potential for the buyers to come in. One thing of concern a little bit is that Google is having a hard time with its 50-day moving average. Google isn't the market, nor is any other one stock, but it's just an important leader. And the semiconductors, again, this group has been hurt badly over the last year and a half or so, and it looked like it was recovering in here. And again, if they don't scare you out, a lot of times they wear you out, and you can't always trust these rallies, in particular when the larger time frame is still telling us that we've still got bigger problems in here, that it's likely that this market still needs a lot more time to heal on the weekly time frame before we can really begin to trust these attempted rallies on the daily time frame. So that $30 level is clearly broken on the semiconductors rather. And I had said yesterday that this was really probably the more important level, kind of the line in the sand that says a break below 29.75 is going to be an important event. That if it fails there and stays below 29.75, then it could spill over further into the NASDAQ 100. We'll take a look at that in a moment. As for the Russell 2000, we've still got this market also kind of the same picture. We've got this trend line that's been holding since the March lows. We've got this prior level of resistance now at about $70.40 that ought to act as support. It has once, twice here, this morning. And now, just because we can draw these lines in here doesn't mean the market's going to conform to those. These just provide structure to looking at our analysis. The thing to look at here, though, is again that the shorter term time frames are flashing warning signs once again, just like we had a week and a half ago back here when this market started breaking down on a 10-minute time frame. Now we've got the same thing here. We've got this pattern of lower highs and lower lows. We started seeing that yesterday. Now maybe it's just more neutral in here. So I think that getting back above 71 and a half or back below $70.40 is kind of going to determine the direction for the shorter term in here. But again, the 73 level is the bigger level that we really need to be concerned about. As the market approaches that level, it's clearly been an important area for prior support that has become resistance as well. So that's where we've seen the sellers lurking, basically, is 72 to 73, and perhaps we'll see them there again. I don't want to make predictions. I just want to look and see, well, if this level of support is broken, well, then maybe looking at a few more short sales is a better idea. You have to listen to the message of the market, and right now it's just kind of flashing some more cautionary signs. The XLF, same thing here. We've got this this trend line that we can look at and say that it's just barely trying to hold on to that. That's also that very important level that we've seen here the last several weeks. Is that 26 to 26.20 level. This is a level I've pointed out numerous times in this group over the last 6 weeks or so. Looking at this, though, again, we've got the potential for a reversal pattern. It's still not completed yet, and this is this is why there's danger in buying early, is because we've got right now this market broke down through a little bit of short-term support here. That's caution. It gives us reason for caution. But I think above $27.20 or so, $27.20 or so, that's where we could get a little bit more aggressive, maybe on the long side. But right now, this level right here, this 26.20, it's below that, but really the level, the more important area of support for this market is this 26 to 26.20. This tells us we got to be very cautious in here. But if the market can maybe just trap sellers below that and recover back above it tomorrow, then perhaps we can start looking at these longer-term time frames and look for the potential for some bigger movement. But right now, it's just saying very cautious is the proper way to look at it. The NASDAQ 100, the Qs have been battling the last couple sessions with that $46 level that I've been pointing out here for about 4 or 5 sessions, and we've seen the market get above that 46 level, on Friday, and then again on Monday, and late day sell-offs brought it back below that $46 level. So you can't really say that we got above it. Well, we got above it, but we didn't get above it and hold. Then the market made this lower low. Again, today we saw another lower low, a lower high, and now a lower low in here. So you got to be very careful with this NASDAQ 100 right now. It is just above a larger level of what should be support near the $45 level. Below that, 44.50 has been important, and of course the much more important level at 43.50, because that is where this rally kind of materialized from last Tuesday as it ran up from there. But right now, we've got this high, we've got a higher high. Now, if a bounce materializes and fails to get above 46 or so, in other words, if we find 46 sellers at 46 once again, we could be tracing out a little head and shoulders topping pattern here. It breaks that neckline, breaks below, breaks the trend line rather, breaks below the neckline. Then we could see this market sell-off get a little bit more serious. But again, the daily pictures, we've got the 10-day moving average above the 20, above the 50. So we're getting a much better looking daily chart than we've seen in a while for the NASDAQ. And again, you've got to just look at it as a lot of mixed signals from different time frames in here. And all that means is just go slow. Obviously, we've got earnings reports due out, and that just adds more volatility to the mix, more reason to trade smaller share size and to be aggressive about getting in and out.